Welcome to the Metaverse. My name is Larry White. I am the founder of Retail Electronic Visions and the owner of the Ritz Group. My goal today at Angel Club is to introduce you to the Metaverse, beginning with where we are today and then how we will evolve to the Metaverse. Now, in the beginning, we had the physical retail merchant world, then today's internet e-commerce world called Web 2.0 that consists of social media, e-commerce, cryptocurrency, and gaming technologies. That will lead us to tomorrow's metaverse world called Web 3.0. With any new shiny technology object, there are always some new terms, and we will start by defining them first. The first question always asked is, what exactly is the metaverse? The metaverse, referred to as Web 3.0, is the evolution and integration of today's Web 2.0 social media, e-commerce, gaming, fintech, smart contracts on the blockchain into a new augmented reality or virtual reality community experience that will easily enable the exchange of assets, person to person. Now, DeFi stands for a decentralized finance that migrates today's traditional financial transactions to smart contracts housed on the blockchain. DeFi is the principal technology paradigm shift to manage asset ownership in the metaverse economy. In DeFi, assets transfer, buy, sell, or trade does not have to pass through a traditional third-party middleman. It is person to person. Cryptocurrency is a new asset-backed digital currency that can be created, bought, and sold with a smart contract on an SEC-regulated exchange. It is also called a fungible token. The new kid on the block is NFTs that stand for non-fungible tokens. They are also crypto tokens that are created with a smart contract on an exchange, but the asset is digital versus physical, and a one-of-a-kind collectible that is unique. Blockchain is a technology architecture that uses a smart contract to register ownership of an asset transaction across multiple authorities versus today's one-of-a-kind authority that can be hacked or compromised. Now, with this basic understanding, let's see how they all play in tomorrow's metaverse. Now, when you think of the metaverse, try to visualize thousands of specialized communities using some form of augmented reality or virtual reality to make the member experience simple and exciting. It is a digital experience that can enjoy, be entertained, conduct business, buy or sell something. So how are we going to get there? No better beginning than to look at Facebook and Mark Zuckerberg's announcement in the fourth quarter 2021 that they are changing Facebook's name to Meta. Now, what do we see? First, social media companies like Facebook are no longer just social media. Facebook has been a phenomenal success story, providing 1.9 billion members a voice to the world, generating $86 billion per year in advertising fees to amplify your voice. Now, Facebook recognizes businesses need a voice and will pay even more to boost that voice. Plus, Facebook has quietly launched 3 e-commerce venues that enable members to sell items, plus storefronts and e-com shops. The latter has a Facebook shopping cart, and they charge 5% royalty for items sold on your Facebook e-com shop. No question, Facebook intends to leverage their 1.9 billion members into the world's largest e-com marketplace. These new functions introduce a new level of complexity to users and also boils the ocean with regard to delivering quality candidates. The riches are in the niches. TikTok and Pinterest are niche social media platforms. They used one media, video, or photos, as the vehicle to express your voice to the world. You can also amplify that voice by advertising to promote. Pinterest segmented the Facebook marketplace to hobbyists or people with ideas. Pin a recipe to your bulletin board and get photos of similar recipes. Same for ideas, even products. Pinterest, like Facebook, also recognized businesses needed a voice, and they now have two profiles, one for individuals and one for business. They also offer a storefront to businesses, and one can expect in the future they will offer full e-com shops with royalties. However, adding function also adds complexity, and even with a segmented candidate set, they are still boiling the ocean with regard to delivering quality candidates. The good news is niche and segmentation is still lucrative platform play. In 10 years, Pinterest has 470 million members, $2 billion in revenue, and growing at 25% per year with a market cap of $49 billion. Now the race is on. Facebook will evolve from a social media platform to e-commerce to trailblazing their own unique version of the metaverse for their 1.9 billion active monthly members. The pot of gold for Facebook and the metaverse is capturing a percentage of the sales transaction. The challenge is reducing the user complexity and making the experience exciting. The rest of social media communities are also following the same path to leverage their member database. But guess what? Today's traditional e-commerce behemoths, like Amazon, Walmart, Costco, having mastered e-commerce and their supply chain automation, will focus on extending that customer experience to utilize the latest tools made popular by the metaverse. Now, let's step back and review the two architectures to exchange assets in today's Web 2.0 marketplace. The first is traditional Web 2.0 e-commerce and merchant banking used by Amazon and others. They have automated the consumer physical asset buy-sell womb to two. They allow independent suppliers to warehouse, list products, and have Amazon ship and deliver. This sets a high bar for social media giants trying to enter e-commerce. The second is DeFi e-commerce. The centerpiece here is blockchain to facilitate the exchange of an asset person to person using digital wallets, eliminating the traditional middleman. The first logical market is the exchange of digital assets. Next, maybe the person-to-person selling of physical assets like classic cars or artwork. Now the race is on. The challenge is how majors like Amazon will integrate this buy-sell technology into their traditional customer experience. My guess is they will develop niche AR and VR communities or marketplaces that once the smart contract is executed, they will authorize pick and delivery from their warehouse. It is expected that for the full metaverse to roll out will take a decade or more. The key is if we have one standard or a different metaverse from Facebook, Apple, Microsoft, Google, each trying to capture niche markets to leverage their current captive customer database. Or will the industry drive the metaverse? Now, to look at the industry progress, I need to take you way back to circa 2018. In April, the Ritz Group completed our 84-page TAO required to launch the Ritzy cryptocurrency token, backed by our pool of early-stage startup ventures that we believe had the greatest exit ROI. The Ritzy token was a major investment breakthrough for today's private equity investors. Angels benefited two ways. If the price of the token went up, or if the valuation of the venture pool went up. More importantly, they could sell their Ritzy token at any time versus waiting 7 years for their traditional private equity investment startup to exit. Now, we shelved the project because cryptocurrency tokens were just too early in the game. The SEC came out with new rules requiring cryptocurrency to be backed by an asset. We didn't have a problem with that. Their regulations regarding exchanges to mint and trade were unclear. Creating on the blockchain, smart contracts were just emerging with many unknowns and very expensive. The sum total was, all of this just represented too much early investor risk, and we shelved the project. Oh, how far we have come in 4 years. What blew me away was discovering that we have the technology in place today to mint, list, and trade your NFT in 15 minutes or less on the blockchain in not one, but several exchanges. That is a far cry from the Ritz 2018 experience. This, for me, is the tipping point signaling that NFT has a chance for success. The paradigm shift is establishing the value of a pure digital asset versus today's physical asset valuation. Now, this also paves the way for the emerging AR and VR digital communities like Decentraland and the Sandbox. Now, here's your proof item, how easy it is to create your NFT. Step one is to create your digital art. And you would be surprised at the number of computer-generated programs that can help you do that, or create a computer-generated variance to create a collection of your unique works. It is also unbelievable how many traditional paintbrush artists use computers to create their masterpiece. It is a new world for artists. Digital meets physical in art. Step two is picking your listing or trading exchange. There are several, with OpenSea being the most popular. Others represent more niche markets, like Bitski for fashion. Some are using alternative blockchain protocols to reduce Ethereum transaction fees, called gas. Step three is filling out the application that includes a smart contract, number of each digital asset or collection, and then you enter your go-to market pricing. You can set your price or place your NFT out for bid. Step four is paying for listing your NFT using your digital wallet, like MetaMask, which you must preload with Ether purchased at some price. Step five is viewing your NFT on the exchange marketplace. This is where others find your digital work of art. Other NFT marketplaces will spring up to provide specialized venues. Step six is promoting your NFT on social media like Twitter or others. Key to ramping NFT success is if you have followers that you can promote your NFT. If your NFT works in an AR experience or VR experience, like the Decentraland or the Sandbox, then it also drives potential new buyers. Now, the Wild Wild West Metaverse has divided our asset classes into two groups, fungible and non-fungible. Fungible tender is cash, stocks and bonds, bitcoins, and crypto tokens, all asset-based and SEC regulated. Fungible means the value of the asset across its ownership is the same. A US dollar has the same value to all of its users. The market value can change, but this impacts all owners of a fungible asset. Non-fungible, or NFTs, consist of digital assets, also SEC regulated, that are all unique with ownership registered using a smart contract on the blockchain. This new and unique digital asset can be anything from art, sports, real estate, cars, TikTok videos, and more. The market determines the valuation of each digital asset. Now, I also found it interesting that in the metaverse, your wealth management portfolio will be expanded. It will consist of your publicly traded stocks, your private equity stocks, your DeFi traded crypto, and your DeFi traded NFTs. You'll have the same goal as today, balance your portfolio based on risk and reward. Now, the $64,000 question is, who's going to really do this? Zillennials to age 35, especially if they have social media following. This includes social media stars and celebrities. The gold rush is $300 to $500 investment can rake in millions. NFT digital brokers will emerge to provide turnkey services to icons and celebrities with fans and create specialized marketplaces for niche NFTs. Social media giants who have billions and millions of fans that are migrating to e-commerce and need to leverage their member database and also reduce the complexity of their e-commerce strategies. Their low-hanging fruit is the one-to-one digital asset exchange. Again, their goal is to capture a percentage of the sale. E-com majors need to find niches that they can leverage their suppliers and provide a new metaverse market opportunity, much like when they integrated warehousing and delivery services for their customers. This recognizes their current suppliers don't have time or skills to position their products in the metaverse, more precisely, in multiple metaverse niche communities. Now for some final thoughts before we turn to your questions. Social media majors, Google and Apple, have the war chest of funds to create and shape the metaverse any way they want to, and will do so. The second major must-watch is the transition from the exchange of digital assets to physical assets on the blockchain. This will likely be driven by the e-commerce giants like Amazon, who also have the war chest of funds to shape their metaverse market in their best interest and at an accelerated pace. So the Metaverse Web 3.0 should be a fun watch as the giant megatechs cobble together the best of social media, e-commerce, blockchain smart contracts into a gaming-based community to simplify and excite customer purchases in both traditional and new one-to-one asset exchanges. Now for your questions.
Stuff. And so I just went on to look at the collections in here and help me understand the pricing, Larry. That's what I want to get, because the only thing I can think of is the people who've got too much money in this world. One of the places, when they run out of places to put it, is something called art, and that's why the art market is so, so high up. I spent $60 million for that Benoit, and so you can come and buy it for 65, and it's a place to put our money. It's the only explanation I can think of is, well, it's another place to stake money, because I'm sure you've seen some of the stuff is absolute crap, right? I mean, some of it's the worst looking stuff in the world. Some of it I can understand and see, but I've just got to think right now this is just a complete bubble of some place to stash crap, and the young kids going on there and making a bit of a market with their, mom and dad's money or their excess money they got from the government. Now, I don't get it. You explained it perfectly. I still don't understand it. From why the hell would we want to do this?
Oh, I agree with you.
Am I wrong?
I agree with you. No, I agree with you 100%. It makes zero sense. Okay. However, the more I thought about it, and I realized a couple of things, two things. When I go to Las Vegas, it makes zero sense for me to place any bets or to play that thinking I'm going to do what? Get rich.
Win.
That's right. But if I don't play, Christian, that guarantees what?
Sure.
I'm not going to win. So if I were smart and efficient, I'd just walk down Las Vegas, throw my money on the floor and walk out. But I play because there's a chance I will win. So it's a bit of gambling. It's a bit of gambling instead. It's the Wild West, okay, which absolutely makes no sense. but it may happen. It didn't cost me a fortune because I can play for $200, maybe 300. Okay. And maybe my downline, maybe my connections. Again, I think that's the key, Christian, is if you've got a fan base or a following, that you've got your chances for success are exponentially greater. Because there's something about digital ownership that your generation and my generation just don't understand. You know, we look at our portfolio, and eventually you'll look at your portfolio, and it's what our digital vault service does, recognizes that people are going to have a what? They're going to have cash in the bank. They're going to have bonds. They're going to have a publicly traded stock portfolio, which is risk with or without reward. But again, we're smart about it. You're going to have a private portfolio, which you and I have lived through, all of us here. You're going to have a digital portfolio, which is higher risk, you know, more failure, but a chance that one of these things may go viral. Okay. That's the only logic that I can even conjure up with this. I think the technology, as I said earlier, and I can't prove it under any circumstances, will be the blockchain technology, and the one-on-one exchange of an asset will be a physical asset in addition to a digital asset. And I think that'll justify the technology. But I really think that by then, this craze in Wild West for owning a digital asset and the pride of that digital asset may make sense for some. Okay.
I mean, I think, yeah, I'll just add one thing to that. I mean, I think you're right. What makes sense though, from a digital asset standpoint is, you know, my house is non-fungible, right? I own a part of it. The bank might own a part of it, but
Yep.
it's a whole asset.
Yep.
And so to digitize that makes perfect sense. To digitize things from the real world, like a one-of-a-kind Renoir, you know, makes sense. I guess it's the same problem we have on NFTs that we have with, well, and pardon my French, Barber, the only mixed company we have here, but I have a investor I'm talking to who's an early Bitcoin, but he's been in since 2009. He mined for 3 years, now he just trades. He was in on Uber and Airbnb early. I spent an hour boxing with him on the phone on Monday. And his email address literally is, at whatever domain he's at, Bitcoin, not shitcoins.
Yep.
And I had to listen to his whole diatribe about,
Yep.
you know, Ethereum is okay at its sense, but it's
Yep.
enabled these shit coins. All you got to do is put a coin out there, and it's all speculative, and
Yep.
it's ruining what he thinks is a good thing. And I somewhat agree with him, but it's that whole area of, you know, let me put up some dumbass coin and see who'll throw money in it and then dump it. Yeah, pump and dump. I mean, it's a way to get around the SEC with stocks. At least if I put a crappy stock out on a patent or trying to do something, there at least might be some good that comes out of it. Other than Bitcoin and Ethereum, what utility is coming out there, right? So it's a crazy space, and I might be out of turn here, but
no. On that point, you've got other crypto tender coming out that is better than Ethereum, less cost for gas prices. I didn't mention in my review that whenever you make a trade or you make certain entries, you pay for that. That's how the exchanges make their money. There are some non-ether based wallets and funding sources that are less expensive than the gas prices for Ethereum. So they're going to evolve to be even better. But you've got to think, again, as the assets and the risk that you're taking. This is higher risk, you know, and again, the SEC hasn't fully embraced NFTs and to realize that there may be fraud, but again, you fraught the fraud by the fact you put it on the blockchain. Okay. And you validate whether they use KYC or not, you validate party A and party B. And I think it's going to be, and the real problem in this is the fact that how do I know that the token that Christian Kocher, the NFT art that Christian Kocher just did of his house, is in fact, he owns the digital rights to that I just didn't copy and paste it, and I went to the OpenSea and listed it before Christian did. Now, the fact that you own the physical asset does not guarantee that you have the rights to the digital asset of your house. Okay? Now, if you created a cryptocurrency token called Culture, okay, that was backed up by the house as an asset, that's a different ballgame. That's not what an NFT is. An NFT says it's just a digital picture of your house, and it's backed up by nothing other than Christian Culture was the first to list it on the blockchain and is a real person, and that is a real asset, a digital asset. And that's it. And so SEC, the asset is the damn digital representation of Christian's house, which is black and white, not color.
Right.
If I create one in color, that's another digital asset. And if Barbara creates one in 3D, that's a third digital asset of your house. Now, the fact that everybody is flocking to Barbara's digital asset of your house first is going to be worth a whole lot more money than your color or my black and white. That make sense?
Yep. So I have 4 Black Hawk helicopters at 500 feet going over my lake here. So something weird's going on. I'm not even close to Ukraine, so I don't know what the hell is happening. So I was a little bit distracted, Larry. Sorry.
No problem. Go ahead.
Is there also an element that, you know, if we all think about what a JPEG is, right? A JPEG is, you know, how many each pixel has a color coordination. So the absolute unique identity of that entire JPEG is one big number that is unique, and that can be proven, right? That is done. So if you say a picture, you and I could take the same picture, you know, with a different camera standing next to each other, and it's still slightly different. There is a uniqueness to both of our JPEGs, right?
Right.
So,
and I don't see any. I can guarantee the exchanges are not going to get into this dispute as to who owns the picture of your house. I think it's going to result into the whomever lists it, and I think there could be multiple listings. It's what the fan base or the public buys. If they're buying yours and not mine, tough. Okay, right. And yours is worthless, and you lost your $300, and mine is worth 1.2 million. And it's the same damn picture. I registered it legally. It's on the blockchains. All the people that bought it, all the people that are trading it, I've done via the exchange, and I've done it appropriately. Okay? All the people that buy it are legit via the blockchain and their wallets and their KYCs. So from that perspective, it's pretty legitimate, with the exception of who the hell is the original owner? And I don't think they're going to get into that. They're going to say, let the buyer beware. And the fact that all these guys like which was not JPEG, mine was a PNG version. Who cares? That's the business. And that's the craze that's taken off. So it's back to, I'm not going to invest, I am or I'm not going to invest in a digital portfolio of high risk crypto art, digital sports memorabilia, artist signatures, whatever, even though they are also trying, if you buy the Terry Bradshaw picture of his memorabilia, he's going to send you a t-shirt, or he's going to send you an autographed picture, or some incentives. Those are also things that are coming in with the incentive to buy that digital asset. Make sense?
Yep.
Okay. And you got to realize that people are looking for a faster way to the promised land and the gold rush, and monetizing digital assets is what the metaverse is all about the new part of the metaverse, the Web 3.0 part of the webverse. The metaverse is all about. For example, we always had Farmville. You could buy a cabin or a farm, a barn, but you never could sell it. Now you could sell it on the metaverse. And if there was a game called in Decentraland called Farm-ish or Farm something, you could use your digital asset to do that. I just listened to Daryl Albright's Bitsky presentation, and and they do fashion, and excuse me, and they do fashion. And I thought, what in God's name is digital fashion? How can that ever be worth anything? And I guess where it made some sense, little if any, was that if we were in a digital community, that I was able to take, and my avatar had my digital fashion that I owned, that was prestigious, that would mean something. Now, I got to tell you, I will not be participating in that, but I'm not saying my 14-year-old grandson would not be all over that in 30 years from now. Okay? And that's what we're targeted for. The technology, the e-commerce, the social media, the exchanges that already exist today, okay, is all heading to that fulcrum point called the metaverse. And again, led by Facebook, who has a war chest, and the $2.9 billion membership to drive it. And there ain't anything that the rest of us are going to do except maybe provide parts and pieces as this boat leaves the dock. Questions?
I do have a comment. You know that Facebook has changed its name to Meta.
Yes.
So just in support of what you're saying, they are Meta, and the new real estate is digital real estate. It's not the land real estate from our generation, but it's a new asset class, which is digital real estate, and the ownership of the digital real estate is the new asset class.
And do you know how that works? Barbara, does that make sense to you?
Oh, no, none of it. It does not make sense to me at all.
Digital real estate makes no sense to me at all, except if someday we wanted to participate. Like today we participate in Facebook, right? What if we wanted to participate in a Meta Fanville community? Use the Dr. Pepper commercial. Okay? And a part of that Fanville community was a beachfront that we brought to Fanville, that we owned that beachfront because we bought it on the Metaverse through one of these exchanges. And Christian bought another block, and Roy bought another block, and Todd Cripe bought this block and that block, and we created a community. And that digital community was so popular. We were selling things out of stores on that community. It was an actual digital community that people were living in. We were going to add some virtual reality to the experience. Okay. And since we sucked up all the digital beachfront, our property rose in value. Okay. And we're living in an alternative reality. Okay. And I should have bought that.
Not even the real world.
It's not the real world. No, it's not. It's not my world. And I can assure you I don't have to deal with this damn thing. But it is my grandson's world, like it or not. Okay? And maybe my children's world. But it's there, and technology is going to make it happen. And Facebook, Google, and eventually Amazon and Walmart are going to also make it happen because they care about selling things from A to B and making that commission. You
Sure. Larry,
yes.
Larry, the one difference, one of the many differences in the real estate analogy, and I know there is virtual real estate that people are buying and selling right now.
Yep.
But, you know, forever, and I don't know how many centuries, the old adage in real estate was, why is it worth so much money? Because they're not making any more of it. Period.
Yeah.
In the statement. So if all of a sudden all of the beachfront property in Farmville sells out and it starts going up in price, well, you know what? Kim Kardashian makes her own virtual subdivision in Lakefront, and she sells Kim Kardashian Lakefront property. And then when hers sells out, another actor makes it. It's an unlimited supply. And when somebody sells out the whole collection of cat videos and cat pictures, then somebody else makes some new cat pictures.
This is going to work, is it?
There's no upper limit to this stuff.
Yeah, that's right. And you think her facial cream, Kardashian's facial cream, is any better than what you can buy at Walmart? Hell no. No. There's an unlimited supply of facial cream. But Kardashian has built a brand, an environment that makes hers worth a lot, and she sells a lot of that.
That's the value of celebrity. Okay, that's a completely different discussion.
No, well, that might be, but it's the same analogy. What we experience in the physical, and I get your point about globally. Don't get me into the multi-universe thing, but globally we have a limited supply of land. Okay, digitally we have an unlimited supply, but the answer is not really. Okay, it's more expansive and it's unlimited in effect, but it'll still be based on popularity. Facebook is based on 2.9 billion is based on its quote popularity. Is it any better than anything else? Hell no. In fact, it's worse. Okay, Christian and I can develop a platform that's 100 times better than that. Won't get off the ground. Okay, better to.
But here's the difference. Here's the difference, Matt. Here's the difference. Like you can build a better one, but it's about that community. It's just kind of like Starbucks. Starbucks is a coffee house, but it's not just a coffee house. Right. They sell community. It's just like this high-end mansion in one block, and then you have the low income in another block. So in real estate, it's about that location. You can only buy into this community.
You got it.
Of this celebrity, if you have X amount of dollars, whether it's in the physical real estate or digital real estate, then you have access. So now they're selling access. So that becomes,
and they're building.
That's the product.
And they're building a community.
Yes.
It has value to the people that want to join and belong to that community. Identical to physical. Okay. And not related to physical. No, I live in the neighborhood I live in because I liked its amenities.
Right.
They believe, and there's a whole generation or multiple generations out there that believe that participating in digital communities is fun, entertaining, profitable, and worth their time. And it's a parallel universe of what we do in the physical communities today.
Correct.
Okay, I got a question if I can jump in before we run out of time. One of the most interesting things that I think has happened this week goes back to what Christian was saying about Bitcoin, not shitcoin. And that is Bitcoin is supposed to be a safe haven when there are disruptive things that are happening around the world. Right now, we've got a lot of disruption with Ukraine. So you would think that Bitcoin would be tracking in valuation along the same lines as gold, because gold is also a safe haven when there's disruption. That's not what's happening. So gold is doing what it's supposed to be doing, but Bitcoin is tracking along NASDAQ. So it's tracking along as if it is a tech stock, and that doesn't make any sense to me. So does anybody have any thoughts on that?
Christian?
Christian. Yeah, I got to get to my mute button here. Yeah, I've got one here. So I was talking to some. So I've got two Bitcoin companies that mining companies that I'm associated with. One I'm trying to get to buy or invest in our GPU miner, and another one we're partnering with in some other ways. So I've gotten interested and used to it. And when I talk to some of these guys, they talk about how all the guys at Wall Street say this is a bunch of crap, cryptocurrencies crap, don't do it. But in the meanwhile, they're putting all their money in it. So Todd, I understand and I agree with what you're saying. It is tracking more like tech now. But this guy that I talked to on Monday, he's like, he calls it a true utility token because the utility is it's supposed to offset our need for fiat currency. And I don't know if you guys have read the Bitcoin white paper. I always say I'm embarrassed that it took me 12 years to get into this because as a recovering accountant, as a former developer, I should have been there first, but I didn't because of kind of the commodity side, right? And so when I went and read the white paper last summer, I only read the first page and the last page. The middle's kind of a bunch of math. But what really was fascinating to me was the last page. What I remember, what I read or heard was because we can no longer trust the fiat currency of the central banks to maintain our our fiat currencies, that trust issue is what's been violated. And when he wrote that in 2009, if I would have read it back then, I probably wouldn't have got it. In the meantime, think about the supply of the money that they've messed with. Think about the exchange rates, that especially the interest rates that they've completely manipulated, and think about the central banks trying to control everything. I think there is a huge utility for this. And I think that said, I think they realize that. That's why China quit doing the mining, right? I think over half the mining was in China up to last year, and they closed it down because China sees Bitcoin takes away their central bank power. Just like the U.S. is now pushing, and they pushed in several of the last bills, this U.S. Treasury, UST digital currency, which not only allows them to print more money like jackasses, it allows them to track where we spend it and turn us on and off. So the long answer, sorry, Todd, is I think they're manipulating it because I think all of those people on Wall Street and the central banks are playing with it in the background. And just like, what's his name would go into and tank currencies and try to take over, I think there's a lot of gaming going on right now. But I think the long-term values and virtues are there, and I think it's a solid bet long-term.
Okay, well, I appreciate that. Here's my second question to the group. We got 5 smart people here. How many people invested in wheat futures when they first heard about potential Ukraine invasion? Nobody.
Oh, that's a good idea.
That would have been a really
hell of an idea.
Smart thing to do, and it didn't take a rocket scientist to figure it out. I didn't do it, but wish I would have.
Really good point. You can have the wheat in the field, but if you can't get it out, then you need to get over here.
Yeah, yep. Wheat prices are spiking. Flour is going to go through the ceiling, and anybody that was watching the news could see that it was going to happen. Right?
Wow.
That gets back to rare earth metals and everything else. Go ahead, Roy. What are you saying?
I was just going to say, I do have to run. I've got a 1:30 I've got to jump on to, but I appreciate it. And Christian, it's good to see you again.
You too,
and, so are you back here in Atlanta?
Yep, I'm up and coming.
Okay. Run across each other soon.
Guys, I might head back to Friday morning. Check out Brett. I might go back to one of these Fridays. So maybe if you guys want to do something, I'm trying to just focus on fundraising for these 2 entities right now, but it is good to start getting out again and see y'all. So glad to see you. Nice to meet you, Todd and Barbara, and Larry. Thanks for putting this together. This is awesome.